Hey everybody, this is Andrew. I want to share with you some ideas about investing in the stock market. And it's going to sound rather surprising that the simplest things are the ones that are going to work, and if you do them over and over and over again. I've been using the same methodologies that I've been using since 1994, the same. And the fact is, they're not overly complicated. They're based on very successful investors, traders, and put my own personality on it, because that's really the key, is you have to put your own personality on when you're doing this trading. And the idea is like this. I trade stocks, which is based on Jesse Livermore and William O'Neill, Can't Slim. And then I invest in stocks, which is long-term holdings, which I look at, using Warren Buffett as the example, that money is made over holding quality companies over very long periods of time. And I combine the strategies, both the trading and the investing, both fundamentally, like I want to buy the strongest stocks that are making money, that I understand, that I have a conviction on, and apply a technical filter on it. So let's talk about the trading. The trading it's all based on Jesse Livermore and William O'Neill, and I definitely suggest you read the books by both of them. I look to buy the strongest stocks fundamentally, companies that are making money. I look at earnings per share, earnings, quarterly sales, current earnings, all those things. And it's all on Investor Business Daily. And it's called investors.com. And you can do a stock checkup, which I do. And I'm trying to buy the strongest stocks in the strongest sectors. And companies that understand. Example, PayPal was a recent trade, or NVIDIA that I'm doing. And there's a shortage of chips. There's a story behind each of these. And there's a reason. It isn't just I'm buying a lottery ticket and I'm whatever. Then I put on a technical filter. With the trading, I have identified my universe fundamentally, and then I'm looking for breakouts. And they have different types. It could be cup and handle breakouts. It could be flat base breakouts. I'm looking for a breakout. And immediately, like I say, I do the same thing over and over again. I put in a stop immediately because, you put in a trade, you have no idea it'll work, and I have a 7% risk. That's it. Ideally, I look to profit 20 to 25% for my entry. And then I have other rules I can add on pullbacks, on gaps, on earnings, if I pull back to the 50-period exponential moving average. And then I compound that money, hopefully. And that's a trading approach. The investing approach is I take a long-term stance. I want to be an owner of the company. I want to own part of PayPal. I want to own part of Berkshire Hathaway. I want to own part of Ecolab, excuse me. But I also know there's going to be some ugly periods. There's going to be some ugly stock market turndowns that even the good stuff is going to get clobbered. That happened in 2008. It's going to happen again. So what I do is I use long-term moving averages. I hope you like these, videos. I try to keep them short and to the point. Share them with your friends. Again, I'm not trying to give anyone any personal advice. I'm giving my own experience that I've been doing since 1994, and I hope this helps you. Thank you.